Your fund has done well. What are you doing right? What are you overweight?
We continue to be overweight in the consumer sector. I think domestic consumption is something that we see as a long-term play and structural growth driver for China, not just in the next quarter or two, but for the long-term future. We also see it as very much aligned with some of the policy goals that the government is rolling out. So things like common prosperity. We don't think that it is going to be hurting the consumer sector. In fact, I think the idea that everyone is given a more equal chance of social progression, targeting the lower and middle income groups. Hopefully that will mean rising wealth across the population and more demand for more premium goods and services.
Where in the consumer space do you focus on? Because it could go anything from electronic appliances to property, right? Like, what do you actually look at in particular?
I think we're overweight to both consumer staples and discretionary. So, as you say, that's quite wide. We're not so much overweight in the property sector, but I think more direct consumables, food and beverage, even things like retail, auto parts. We find some good opportunities there.
I know you can't talk specific names, but when someone tells me consumer staples, that can mean only a few big names that make a certain product or a certain liquor. Let's put it that way. None of the regulatory issues or the slowdown, in fact, in retail sales, has that affected your investment thesis on these big names at all?
I think in the short term there will be some impact. I think with things like COVID resurgences in certain parts of China and then flooding over the summer, I think that has put a slight dampener on consumer sentiment. But in terms of their long-term positioning, I think the thesis is very much intact, and demand will continue to be very strong.
How are you viewing this Evergrande story right now? I mean, we're starting to see it seep into markets, spill over into some of these property developers, suppliers, and whatnot. Do you see this as something that is a bigger event that could actually go beyond just the property market?
I think with regards to Evergrande, we are still quite watchful over the situation. It's evolving as we speak. We have been very much careful with our picks within the real estate sector. Careful not to, but we prefer developers with stronger balance sheets. And I think definitely the Evergrande situation will have a spillover effect to the rest of the sector in terms of developers, facing a bit more higher funding costs, and buyers as well. They have been over the last few months capping banks' exposure in terms of mortgage loans. So I think the property sector is something that we are still quite careful and selective on.
Yeah, I guess it depends really what the risk appetite is of your fund and the investors that you guys serve. But 7% drop in Evergrande, and who knows really how the market's valuing this already at this point in time. Is it creating, I guess you're more equities, right? Is it creating, I guess, opportunities because it is dragging down other arguably better balance sheeted names? Let's put it that way.
Yeah. Yep, it is. You can see that a lot of the real estate names have been dragged down as a result, even though their numbers might still be looking okay. And I think it's not just the real estate sector, but in general, sentiment is quite fragile at the moment. So any kind of news flow in terms of regulations in any sector might lead to indiscriminate selling across the market, not just in the sector that it's related to. So I think in that sense, it has provided us with a lot of buying opportunities for stocks that were previously looking a little more pricey. The volatility has actually worked out quite well in terms of opportunities for long-term investors.
You're looking at things like innovation, ESG. These are very common themes. Usually you talk about it, and it's also very broad. Yeah. How do you kind of parse through this kind of theme right now, given the fact that there is this regulatory crackdown? Are you able to find a little bit more opportunities in the face of all this?
I think when we talk about regulatory crackdown, we don't take the view that they are no longer in favor of innovation. I think innovation is still very much a policy priority. It's been mentioned in the Chinese government's 14th five-year plan. So I think they're still encouraging investment and innovation. I think in something like renewables, that is a structural growth story. They have a goal of being carbon neutral by 2060. And we are finding plenty of opportunities within the renewables value chain, not only in EV makers, but down the solar value chain, down the electric vehicle value chain. ESG analysis is embedded in our process across all sectors, not only to assess the risks that we might be taking, but in terms of generating alpha. I think that's also something that's been quite good for us.
So extremely short term on the EV front, it's getting crowded across some parts of that supply chain, if you will, that value chain. Where do you think it's crowded? Where do you think it's not?
I think in terms of EV makers, it is currently quite crowded. There are over 300 car makers which are going into EVs at the moment. And so you can see the government, thinking about whether there needs to be more consolidation in the sector. I think within the value chain where we have players that service many players and we don't have to take specific brand risk per se for some of the smaller brands, I think that is something that we feel like is a good way to play the EV story.